For those of you that watched the supplemental video called The Fixation with the Fed, that was prepared on May 29th. Well, I have an addendum to that supplemental video with some additional information that I'd like to show you. If you have not viewed that video before seeing this video, I would recommend that you watch that video first and then come back and watch this video. I do have some additional information. After posting the supplemental video, I ran across some additional information in the ongoing attempt to figure out if the Fed has changed their policy or not. Are they becoming more market friendly or less market friendly, or is anything even happening at all? This may or may not change the hypothesis that the Fed has shifted to a more dovish or market-friendly stance, which is kind of what I brought out in the first part of this supplemental video. Ever since we had the release of the FOMC meeting minutes last Wednesday, May 25th, the market has taken it to mean that if inflation is in fact starting to come down, the Fed might be open to delaying or pausing some interest rate hikes in the future. That's the premise that I made forth in the first video. I want to make some additional information to that statement. My intentions are to make further updates in the daily video updates that I prepare each day. However, as I'm recording this right now, it's about 22 hours before the market will be open, and I felt I needed to get some more information out there to go along with the scenario that I've already presented. And so I wanted to do this short update to go along with that. So why the update? The reason for that is opening up trend-based positions. For those who have not taken any classes that I offer, and I do have a free class that you can take that's available on YouTube, it needs to be updated, but a lot of that information is timeless. What I suggest in that class, and if you get to know me very well, you'll know that I suggest the following tactic when you're entering a new trend-based position. That means you're getting in thinking that the market's going to go up or that it's going to go down. Open the position as close to the close as possible. There's an old adage that I've said many times, and I've seen this to be true. It's the amateurs who open the market. It's the professionals who close the market. There are few things as disheartening as getting into a position and you think, everything's great, everything's wonderful. And then right off the bat, you're losing because you want it to go up and now you see that investment decline. To me, that's really disheartening. If I've analyzed things and I see that the trend is positive, I'm only going to get up if the market is up. The inverse of that is also true. If I'm looking to go short or benefit when the market goes down, I'm only going to get in if the market is down. I know that goes against a lot of logic. I know that goes against a lot of what other people teach. If you want to buy something that's currently at 10, why not wait and buy it at 9 or 8 or 7? Well, to me, for that price to fall, everything might have changed at that point, and you may not want to get into that position after all. That's just where I come out, and I've seen that be successful for many, many years. However, many participants and those that listen to my videos, they don't do it that way, or you can't do that. For a lot of you, the last hour that the market is open, you're at work. And so you can't look at the market, you can't really make decisions, you can't see what's going on, so you have to make your decisions at other times. And that's another reason for doing this update right now. It was felt that I should make an addendum to that supplemental video to make this information available before the trading day on Tuesday, May 31st. And I'm recording this on Monday, May 30th. When I went back and listened to this myself, I felt that I was a bit too enthusiastic about finding the answer than was really warranted. I think I got a little too excited about that. I found some other information that kind of sobered things down a little bit, and that's what I want to share with you right here. First of all, the comments that were cited in the video that I made were not made by Chairman Powell. Rather than having that come from Chair Powell, it was made by Raphael Bostic, who is a very important person. That person is the president of the Atlanta Fed. That's not the chairperson of the Fed. In previous cases, the catalyst that I talk about in the supplemental video, That came directly from the Fed chair, whether it was Bernanke, Yellen, or Powell. They have differences of opinion, and ultimately who the markets pay attention to the most is the Fed chair. Secondly, the timeline of the events as they came out. The Fed minutes were recorded on May 3rd and 4th. However, on May 17th, Fed Chair Powell was quoted by the Wall Street Journal making statements that may not be deemed as friendly or as pivotal as I may have led them to believe in the supplemental video. In fact, they may be the opposite. And here is what I found. These statements were actually made in the Wall Street Journal, and I'll have the link to that in the description. This is what I found on CNBC's website, where it says, Powell says the Fed will not hesitate to keep raising rates until inflation comes down. You see where I have the red arrow? The Fed meeting minutes were recorded on May 3rd and 4th. This statement was made on May 17th. Looking more towards the bottom, Fed Chair Powell said he will back interest rate increases until prices start falling back toward a healthy level. He's quoted as saying, if that involves moving past broadly understood levels of neutral, we won't hesitate to do that. That doesn't sound all that dovish or market friendly. So you have these comments that came out of the Fed meeting that were made in early May, and that's what the market's using to interpret right now. Then you have something a few weeks later that came out that sounds a lot more hawkish or not as friendly to slowing down interest rate hikes. What I said in the other video is still completely applicable. I just wanted you to be aware of this right now. So thank you. I hope you found this helpful. I hope you found the other video helpful. And I probably won't do any more addendums now until the market is closed after Tuesday, and I'll prepare the update after Tuesday's session.